Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, March 11, 2015. You're looking at a daily chart of the SPY. I've got two purple lines drawn in here. We've got support. We can take this out. This was our head and shoulders pattern. Let's just review it. Our head and shoulders from the other day that played out to the downside, okay? We drew the head and shoulders in this purple line across. All right, and once we broke below this line on an hourly basis and closed the hour below this line, that activated the head and shoulders. The following day, the market tried to bounce or rally up a little bit, and then we broke down, and that was yesterday, and this is today. And we're still going a little bit lower, so let's go back to the daily chart, and I want to talk about our targets, and then I want to talk about what I saw today. So our targets are... right here, this first purple line here is going to be primary level of support, and that may even come into play tomorrow morning, depending on how the market opens. We're only $1 away from that now. It's at around 203.50, give or take, let's say 20-25 cents on the SPY. That's going to be your daily chart support, and it's also a Fibonacci 618 retracement from this low here. I'll draw it in for you, just so we can get a visual, okay, if I can, all right? Sometimes these charts act wacky, all right? So right here at 203.35, we have a 618 retracement, okay? So I put the line in at 203.50, and it's give or take a quarter, and there you have it. So a 618 retrace from this low, and I'm just going to take this out so the chart's not cluttered. And also, by a couple of other calculations, I come up with this number. So this should provide a decent level of support. However, that may not be the final low, and we'll have to see how it comes into this number tomorrow, if it's tomorrow, and the reaction off this number. If we get a strong rally off this with volume and what I would call thrust in the market, then that may signify a low and we may make newer highs from there. Or if we have a meager bounce, okay, we may come back down next week and test either the 200 period moving average, or for now, worst case would be this lower purple trend line, which is at about 191, and that's give or take about 50 cents. Okay, so those are the level of supports. But what did I see today in the market that was interesting? I saw a lot of divergences, okay, to name a couple, okay? So, for example, the S&P wasn't down all that much. It was down about 4 points, and the Dow was down about 27.5, and NASDAQ was down about 10 points. But what happened was, first of all, you had the small cap index, the Russell 2000, or the IWM, either way, was up about almost 0.75% today. At least in the aftermarket session, it was up 0.7% in total from today. Maybe it was about 0.6 at the close today. And that's the IWM and or the Russell 2000 index. Another divergence, the transportation index. Quite an interesting scenario. I'm going to bring up the transports, okay? And the transports put in a reversal day from yesterday today. And the transports were up about 100 points, about 99 points, over 1%, okay? And they were strong all day. I thought that was interesting, okay? We have the release of the bank stress tests, okay? What was up today? The broker-dealers were up today pretty strong. They were up over 1% today, okay? So you had the broker-dealers up in anticipation of the bank stress tests. They were up over 1%. You had the transportation index up over 1%. You had the Russell 2000 or the IWM, and let's just bring up the IWM, okay? You had the IWM put in an update today, almost, well, here it's 0.71 or 71 basis points or 0.7%. Okay, that's a strong showing considering the other major indexes were down. Okay, so why do I bring those up? Because you know I'm always looking for telltale signs in the market. So this is what I'm seeing, right? Let's put the puzzle together. What I'm seeing is I'm seeing divergences in the Russell 2000, the transportations, the broker-dealers, okay, or transports, broker-dealers, all right? I'm seeing positive divergences. I'm seeing a S&P come into what I believe to be solid daily chart support, okay? So you couple those things together and you slide those pieces of the puzzle together and you say, well, S&P coming into support, 618 retracement, positive divergences. Market's been down for a few days in a row. Okay, we put in a weekly top a couple of weeks ago. We've had a couple of weeks more or less of downside action. Okay, so maybe we're due for a bounce. All right, let's go back to the S&P just to get a visual. All right, so we put in a high here. Okay, we started down. We tried to rally back up, and then we sold off. Okay, so where is the bottom going to be, or at least an interim bottom at minimum? This is as good a spot as any, folks, right here. And the reason why it's as good a spot as any is because a couple things, okay? If I'm wrong, okay, how much am I going to be wrong by? On the downside, at least on a daily basis, okay, you're going to find good chart support here at the 200, okay? Now, yeah, that's $3 lower or 30 S&P handles, but that doesn't mean you get there in a minute, right? So if I'm wrong and we start to confirm hourly below the 618, okay, then you know that something may be awry and there may be lower prices ahead on this move, okay? But if we have an early morning flush tomorrow and we go down $1.50 in the SPY and we reverse on volume, okay, I'm going to be looking for that because that can be a tell that the market's going to reverse and put in a interim bottom and we can see some solid upside. And there's a lot of stocks that are in good support areas, at least for the time being. Now, that doesn't mean that this could be a bottom that holds for months. We could go back down next week. We're going to see how the rally happens if this becomes a bottom. How the rally happens. Is it strong? Is it a good thrust? Does it have volume behind it? Is it a reversal day? Or is it a weak bounce that puts in a couple of small up days and begins to roll over, and that'll tell us lower prices are ahead. So we're going to take it one day at a time and we'll see how it plays out. But that's what I'm seeing in the market right now. Let's roll over to the oil market. And the oil market was weak again today, and you're at the bottom, of this channel here right now. And, eventually you're going to see a pop up to the upper end of the channel. But the oil market is not giving me a signal that it wants to go higher. It's not giving me a signal that any pattern is developing. It's not giving me a signal on volume it's going one way or the other. It's just floundering around, and it's hanging around in a range. And the range is, let's say, 47.5, okay, up to 55. And that's your range until you break one side or the other with any kind of convincing pattern and volume. Then there's really nothing to say that we're not going to stay in this range for a while longer. So I've got no trade in oil right now. What I'm looking for is some kind of a low to signify some plays that are at good support levels in the energy sector or the whole energy complex to play individual names. But other than that, I don't see anything in the price of crude oil right here. Let's flip over to gold. A little bit disturbing in gold. This move could have lower prices ahead in gold. It just looks very weak. It continues to roll over day after day after day. It tries to go up in the morning and then it rolls over. And that's basically, certainly a bearish sign. And could we be coming into support here at double bottom, over here? Yeah, we could. But, we can also scale down and have significantly lower prices. I just don't like the price action. I'm going to step away from gold for the time being, and I'm going to wait for the market to give me a definitive signal that it's ready to change direction. Because right now, I'm not comfortable with the gold market. I don't see good price action, good money flow. And when I don't see the money flowing into the long side and I don't see positive price action, you have to just be realistic and you have to say, hey, maybe the thought of going long gold up here at 1200 was wrong and there's lower prices to be had. I just don't see gold giving me a sign that it's ready to rally anytime soon. So with that being said, we're just going to let it develop. We're going to let the market give us a signal one way or the other, and that's the end of it. So this business is tough business. You have to be able to recognize where you're wrong and not stay in a trade or an investment based on hope and convince yourself or justify to yourself that you think the price is going higher because of some reason you read on a blog somewhere, some reason you heard on TV somewhere, a reason that only makes sense to you because you're long, okay? Sometimes you have to step back, look at the market and say, you know what, it's not doing what I thought it was going to do. I'm going to move out and I'm going to wait for the market to give me a sign that it's going to go one way or the other. And that's the best way to play it. And that's how we play this business. Okay, let's go over to the bond market. I'm going to bring up the TLT and another update in the TLT. And remember, we were buying the TLT down here at 124.25 the other day. Okay, and we've had a nice 3-day rally off that area here. You know, that day the market certainly did go a little bit lower, but right back up the next day, and then 2 follow-throughs into the 20-period moving average. And I think there should be higher prices ahead. However, you're going to have a tough time getting through this area right here at about 129. So 129 and 130 is going to be a lot of chart resistance. You have the 50-period moving average, and you have this high here where you had a big sell-off candle, and that's going to provide a good level of support at the top end of this candle at about 129. So what that tells me is that if you flip over to rates, all right, it tells me there could be some more downside to rates. Let's just see where this closed today. So the low from the other day was 2105. And today the close is 2109. So we closed above the low from the other day. Now, if we closed below it, that would have been a bearish sign. We closed above it. So technically, we're still in the zone where we could see higher interest rates, which would mean lower bond prices. But if we come below this low, we'll certainly find a little bit of support here at the 20-period moving average and much larger level of support if we get down to the 50. I don't even know if we get down that far. I think you'll find a lot of support at the 2% area, which is right in here. Okay? So anyway, that's a snapshot of the bond market at interest rates. Do I have anything else? The VIX was up slightly today. And I know last couple of days I've been talking about the VIX, and we got into the 50-period moving average. On this move, I really don't see much more than, last night I said 1920. I don't even know if we get up that high. Even if we have a little bit of a flush tomorrow, maybe we get up to 18.5, 19. We'll see. We'll see how it happens. But, I think we should find a fair amount of support down at the, let's go back to the SPY and we'll give it a wrap. Should find a fair level of support at this area at 203.5, give or take a quarter. And that should provide a bounce in the markets. With that being said, hopefully it's been helpful, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.